Hello everyone, how are you doing? Welcome back to this channel. Our challenge is up and running. The last video I did on this particular challenge was to explain everything about the challenge, explain the strategy I'm going to use to raise $1 million in funding. So in case you've not seen that video, check the link in the description of this video and you'll see it. You need to watch it and see what we are doing and how I plan to get it done. Without further ado, I remember I promised that every single step in this journey I'm going to document it on this channel. So um, this is the first video, or I say episode 1, after the initial introductory episode. So this is the episode 1 to document the progress I've made so far. So right now guys, I've been able to raise the first capital. We've been able to pass the first account. We've been able to get the first funded account running, even though I've not been given the account yet, but it's been passed and I've done the KYC. So from what we are seeing, this Maven trading, this Maven markets, I think it's maventrading.com. So I decided to use Maven because their challenges are cheap. So from what I said in the first video, guys, if you've not watched the first video, you need to go see the video. It's in the description of this video. So I wrote that one of the strategies was to trade the accounts fast. Okay, no point sleeping around with the account and not making any progress. So I said I'm going to be using a high percentage trades to pass the accounts. Okay, so I went ahead and I got the first account. Now in Maven they have two-phase accounts. So I went and bought 5k accounts, two phases. So I was supposed to make 8% in phase 1 and then 5% in phase 2. So in phase 1 they have a total drawdown of 8% and then daily drawdown limit of 4%. So I had that in mind. That means $200 is the daily drawdown limit, while $400 is the total drawdown limit on the account. So I decided I'm going to set out risking 3%, which is $150 in the first trade, and then I decided to risk 150, 150, $100. That is 3%, 3%, 2%. That was my plan. So as you can see, this is the first account I bought and I started trading it. My intentions were to pass the account in one trade, like I said in the first video. So I took this trade. This was the first trade. This trade was a mistake. That is the first one showing. The first one showing below is a mistake. So the next one, this odd USD, I don't usually trade markets outside Euro USD. So, but I just saw this and decided to take it. It was a long-term trade that formed on the 4-hour. So I just took it. This trade took a while but ended in a loss. So then I now took this second one. See this trade? I don't understand why this trade blew this account. This trade, by the time I was to take this trade, I was already $150 behind. So I didn't need only $400 to pass the account. I needed $550 to pass the account. So I took this trade targeting the $550 profit, and this was a 3% risk. That is, I was risking $150 to make 550. Friends, this trade took a while, but this trade got to 530. That is the trade. What I need to pass the account is $550. This trade got to $530 and reversed. Can you believe that? This, I've never seen anything like that in all my trading career. It was just few pips to TP, and I was just waiting. I was so sure that the trade, having rallied all this while and gone my direction, 550, $530 is no small move. Why wouldn't it just add the $20 that is remaining for the account to just pass once? I know some of you guys are going to be like, why did you wait for the whole thing to hit TP? You could have closed partials. But you have to understand that this is an evaluation account. I'm not here to just sleep around with it. My goal was just to pass the account, so I framed the trade around that idea. So I was expecting it to pass the account, but unfortunately this trade reversed at this point. And if you can see here, see the eventual loss. This is a Maven rule. They told me that their daily drawdown limits starts counting at the beginning of each day, and it takes into account the equity level at the beginning of that day. So the day that this trade happened, by the time this trade got from the day the major part of the move happened, by the time it got into the next day, it was around that 500 and something, let's say 300 and something dollars in profit in the entire account. That is to say, around 400 and something dollars in profit on the trade. Remember, I'd already lost $150 here, so it was around 400 and something when it started reversing for that day, when the market opened for this day, the day that this account was blocked. So they now told me that the point that the market opened, the equity on the account at that time, between that time and here, that I had breached the daily drawdown limit, which was $200. And I was like, what? I didn't understand. As I saw this, I thought I could just come and take another trade, but that was what they told me. I wanted to place a trade. They told me the account is blocked. So when I asked them, this was what they explained. So this left some equity here that I would have used to recover all this. So I just took it like that and continued. So I went on to buy another account. Don't count this one. This one was way back, an account way back. So this is the first one. This account was the first. Then this is the second account I bought with Maven. So this second account, got blown again, and one of the major reasons, guys, is because of the strategy I'm using, because of the pattern I'm thinking. As you can see, it's just three trades. It's just three trades. So I took this. It ended in a loss. This first Euro USD, second, and then third, it was done. So this one was quick. I think it was just 3 days. It was quick. I'm into this to pass or fail it and move on. So I now went on to the third account. Guys, it was in this third account that I was able to get into my flow and smashed it. In fact, this happened in 2 days. I can tell you this happened in 2 days. This was Monday. I'm going to show you this trade. I'm going to show you this trade. Right, that was what I said I would do. I will show everything. See it, just one trade. I was risking $150 on this trade. So let's head over to trading view. So this is Monday's chart, this Friday, and see Monday price opened somewhere here. Okay, as soon as price opened, this was 6 a.m. and 7 a.m. So I typically love trading the London session. So what I was observing was that market had rallied a lot over the past week, so I figured there will be retracement this week. I figured that this week there will be massive retracements, so coupled with this flat level in price, I knew market will come to clear this place. So having had that bearish objective coming into the week, I was expecting price to give me a sign to join it downward. So this was the place where price opened around here 6 a.m. this 7. So as soon as I got to the chart, I marked out this order block here, and I expected price to tap into it and then begin to descend. You could see the order block. Yeah, so let's go down to the 1 minute to show you how I framed that trade. I want to show you how I framed that trade. So that trade was a very smooth trade. So you can see that other block I marked out on the 1 hour. As soon as I got look at it here, so price came in. Remember, I marked it from somewhere here. Yeah, this 7 a.m. So I was expecting price to tap into the other block again. That was what I was expecting. So, and this was what it did. It did this. It tapped into it smoothly, and then there was a change of structure here. This is where there was a strange change of structure. So I just marked out this, see this bearish breaker, this point. Yeah, actually I took out this inefficiency here. Yes, and then took my trade like this. Then I placed my stop here, and I think I went for 2 point something. I think this was what I went for. No, it was this too much. I think somewhere here, because I was risking 3%, so this was enough. So as soon as price came here, it was done and dusted. So this was how this trade panned out smoothly, very clean. So I immediately moved down to phase 2, the phase 2 of that particular evaluation challenge. And once again, guys, this one was smooth and clean. Check this out. It was just one trade. This was on Tuesday. That one was Monday. Now this is Tuesday. So this one trade again hit the 5% profit required. So let me move on to Tuesday and then show you how the trade panned out, what happened on Tuesday. Okay, so here we are. Let me not bother going to the okay, let me go to the 1 hour again and show you the trade idea. Okay, this is Tuesday. So as price was reacting off this imbalance, I knew that there was possibility of us tapping into coming up back again, because price was rejecting off this imbalance, so it needs something else to push it downwards. Okay, so at that point I marked out this other block here. I marked this one because this one have been mitigated, so I now marked this other one. Let me remove this. Okay, let me leave it because this is the Monday trade, so I just marked this out. Yes, and then I waited for market open to give me a sign. This is where Monday ended around here, so I was expecting a sign on Tuesday morning to run into this other block. So let's go to the 1 minute and see how it's turned out. To see how the trade was now framed. So very smooth trade. I usually love it when trades just behave the way they were forecasted. No stress, not to bother you. So here we are. Market opened around this place, 8 a.m. So by 7 I was already scouting the market. See, 7 o'clock somewhere here. So 7 was somewhere here. So I was expecting market to give me a sign that it's willing to go upward. So see the sign here. By the time price came 8 o'clock, price dropped at this point and began to go up. So similar to the other trade, I marked out this was the change of structure after 8 a.m. This was the change of structure after 8 a.m. So I noted this point, and then just beneath it I saw this. There's this imbalance. This was what I took. I took this imbalance, and this trade was very tricky because when I took this trade, ordinarily if there was another low other than this one around here, I would have placed my stop there, but due to there was no other low lower than another low higher than this, so I placed my stop here. This is where I placed my stop. So fortunately this trade came down to this point, and then see where my original TP was. This was what I was targeting. I think somewhere here. Yeah, that was what I did. So as price came in, I activated my trade, came this low and started rallying up, did like this, and then came here. As you can see, something happened. It didn't touch this place at this time, but by the time it was here, it got to this point, it has provided sufficient amount for this account to be passed. So the trade closed automatically. I wasn't even on the chart. When I came to the chart, I saw that this thing had gone down and had taken out this stop loss. I almost wanted to regret it, but as soon as I checked my account, I saw that it has been passed. So I was glad that that happened. So there you have it, guys. I am funded officially. They told me to do my KYC, which I did. I submitted it today. I'm doing this video, today is Friday, so I submitted my KYC today. They told me they will verify it on Monday, and then on Tuesday I'll have a live account. Okay, so that's it, guys. Hope you learned something. Hope you are inspired with my journey. If you love what I'm doing and you want to follow up on this or my challenge, please subscribe to the channel and like this video so that other people can also see what we are doing. If you get inspired, you can also join me, buy prop account, and then let's get on the journey. Okay, until next time, stay safe.